In today's video, we're going to take a look at S&P futures, and I'm going to recreate one of the setups that we had today. We actually had more than one, but I'm going to show you one in particular, and then I'm going to show you the next decision. So to start with, and this was pretty interesting the way it unfolded, I did have a zone that came in around this area, and I'll show you where it came from. It was the confluence of a 786 retracement of the prior low to high swing that came in at the 2253 area, which also just happened to overlap the low to high extension at the 2253 area. So there was a 1272 extension of this low to high swing. Okay, it overshot it just slightly, but not enough to negate the area. And then we also had 100% of this first swing down, so that high to low projected from this high. Okay, and actually if we label those two swings, that'll show you the similarity. So then it was this and this one. So let's see, did I do that right? We've got this high to this low, and then this high to this low. Yeah, so basically these two swings were also very similar. Even though one took a whole lot longer in time than the other one, we did have similarity in price. Now, bottom line, we did hold this area that included this little bit of a zigzag pattern into key support. Now, typically what I look for when I see those setups is I look for an extension of the prior swing as far as my target's concerned, which means that we would have a higher target at this 2279 area off of this recent swing, but then we would also have a higher target off of this prior high to low swing, and that would come in at the 2284. But what I want to show you is that we have another decision in between that. So yes, we did bounce off of that area, and anybody that was short, we ratcheted down stops and you would have gotten knocked out of it. But can you really assume that you're going to trade up here? Hell no, you have to look at everything. So on a 15-minute chart, this is where I'm going to show you the next immediate decision. Because on this time frame chart, you can see the general pattern. It includes the overnight stuff, which makes this kind of a sloppy and choppy chart. But you can see the general pattern of lower lows and lower highs. So this is what we have to watch next. We did bounce off of that support, but now I've taken 100% of these prior rally swings and I've projected them from the recent low. I also ran the 618 retracement of this high to low, and now we have an important hurdle, and the question is to fail or not to fail. So if we were going to continue to rally from that support and head towards those targets I gave you on the other time frame, this is what needs to be cleared. This 2262.75 to 2264.25 area. Okay? And if you fail to clear it, what can you do with that information? Well, I know that my shorter term traders are going to say, well, if you can't clear this resistance, I'm going to short this again and define my risk above here. So bottom line, it's all about the time frame that you're trading. So some of you might be interested in this setup. Some of you might be interested in that setup that we've already bounced off of. It just depends on how you write up your own trading plan. But bottom line, these levels and areas define risk, and that's what you can use to trade with.